Is Bitcoin finally forming a bottom, or is one more major sell-off still ahead? Institutional investors continue pulling money from Bitcoin ETFs. Geopolitical tensions in the Middle East are escalating once again. Binance is facing new regulatory challenges in Europe, and Bitcoin is sitting at one of the most important support zones of this market cycle. Let's break down what matters most for investors today. Welcome to Fredtong Capital. This is your daily market briefing, covering the biggest developments across global markets, cryptocurrencies, macroeconomics, and institutional finance. Today we'll discuss the latest geopolitical risks, institutional money flows, regulatory updates, and what Bitcoin's current technical structure could mean for the weeks ahead. Let's get started. Daily market briefing. Global markets remain cautious after fresh geopolitical tensions emerge in the Middle East. The United States launched military strikes against Iranian military targets after accusing Iran of violating a ceasefire agreement through attacks near the Strait of Hormuz. Iran has vowed to respond, raising concerns that any further escalation could disrupt global energy markets. For investors, higher geopolitical risk often increases volatility across commodities, equities, and digital assets as traders shift towards safer positions. Meanwhile, the cryptocurrency industry continues facing regulatory pressure. Singapore's monetary authority has added Hyperliquid to its investor alert list, while Europe's MiCA regulations have forced Binance to temporarily suspend certain services after licensing challenges in the European Union. Although these developments create short-term uncertainty, they also demonstrate that regulatory oversight continues expanding as crypto becomes more integrated into the global financial system. Institutional positioning also remains mixed. Bitcoin ETFs recorded approximately $444 million in net outflows during the latest trading session. Ethereum ETFs also saw modest outflows, while XRP and Solana managed to attract positive inflows, suggesting that institutional investors are becoming increasingly selective rather than exiting the market entirely. Bitcoin market analysis. Now let's turn our attention to Bitcoin. Bitcoin continues trading near one of the most critical technical support zones of the current market cycle. Price action has stabilized around the upper $50,000 region, where buyers have started defending support after several days of heavy selling. Multiple technical indicators now suggest downside momentum may be slowing. Historical on-chain data shows that roughly half of all Bitcoin currently in circulation is being held at an unrealized loss. Previous market cycles have shown that similar conditions often appeared during long-term accumulation phases, although they did not necessarily mark the exact market bottom. Open interest continues building while funding rates remain relatively neutral, indicating that traders are positioning for a larger move, but the market has yet to choose a clear direction. Overall, Bitcoin appears to be transitioning from panic selling toward a period of consolidation. Whether this develops into a sustained recovery will largely depend on institutional demand returning to the market. Ethereum analysis. Ethereum remains technically weaker than Bitcoin. Current wave analysis continues pointing toward additional downside risk if the broader market weakens again. The major long-term demand zone remains between $900 and $1,000. However, before reaching that scenario, Ethereum must first hold above its current support while attempting to reclaim the resistance area between approximately $1,800 and $1,200. Relative strength against Bitcoin also remains weak, suggesting Bitcoin continues to outperform Ethereum during this stage of the market cycle. Key levels to watch for Bitcoin. The first major support remains between $57,000 and $58,000. If buyers successfully defend this area, Bitcoin could begin recovering towards $62,000, followed by $64,000 if momentum continues. However, losing support would increase the probability of another move toward the lower $50,000 region before stronger buying interest returns. For Ethereum, investors should closely monitor support around $1,500, while the first important resistance remains between $1,600 and $1,800. Market outlook. Looking ahead, markets are entering a critical period. Institutional ETF flows remain cautious. Geopolitical risks continue influencing investor sentiment, and regulatory developments are reshaping the crypto landscape. Despite these short-term headwinds, long-term fundamentals remain constructive. Institutional adoption continues expanding, regulatory clarity is gradually improving, and historical on-chain indicators suggest Bitcoin may be approaching an important accumulation phase. For now, traders should remain patient and continue monitoring key support levels before expecting a sustained recovery. That's today's daily market briefing from Fredtong Capital. If you found today's analysis valuable, be sure to subscribe and turn on notifications so you never miss our daily coverage of Bitcoin, crypto markets, macroeconomics, and global finance. Thank you for watching. We'll see you in the next market update.